Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Just pulled up the bias chart. One last comment that Cliff made. He says shallow retracement on a 30-year trend. So let's look at the dollar index again. Let's go over to the weekly chart or monthly. It doesn't really matter. Let's go to the weekly chart. You say, well, it's a shallow retracement on a 30-year trend. But why is the trend changing? You got to be able to see the forest, behind the trees. So why is the trend changing? And the dollar index longer term. Why have we broken that downtrend line that had us contained? My whole up until that point, my whole career has been about the dollar being weak, but it's changed. The dynamics have changed. Why have they changed? I'll give you 3 specific reasons. Because I believe, first of all, that I think that the Eurozone experiment may be viewed as a failed experiment. The Eurozone failed monetary policy experiment. Look at Greece. Look at the issues that are starting to surface with some of the Italian banks again, but this has been an ongoing issue for the last couple of years. Another one is Japan. I believe Japan's economy will eventually go into full tilt ugly, in the coming years, like upcoming years. And then also, third reason is monetary policy is divergent between the U.S. and every other country, because the Fed was the first to respond, and they're going to be the first to raise, and they are, as everybody else is staying easy. That they're raising rates and trying to normalize policy. So those are the 3 reasons why the dollar will probably continue towards 110 to 115 in the coming year to 2 years, in my opinion. Obviously, a break above 150 would be 100.50 would be huge, be enormous. But it's a change in direction of and attitude of the dollar index, big time. That's why the Fed's extremely worried about what the dollar's response will be to raising rates. So again, you have to look at the reasons why the dollar is actually making the turn. All right, let's go over. We got to analyze the charts today, because first of all, this is going to be a really challenging couple of days. You guys have to be very, very careful about what you're doing, in my opinion. The euro dollar is in breakdown territory, all right, and any move now to 112 should be viewed as a selling opportunity. Okay, we've broken out of the triangle. You can see the triangle here. So any move up towards 112, which will be the 618 retracement as well, and be the underside of this trend line here, will be viewed as a selling opportunity. So for those of you that are selling dollars right now and you're like, well, I'm buying the euro because I think the euro is going to bounce, I would be careful with 112, because anybody who's long the euro dollar from last week, they're looking for the exits now. So 112 is going to be the, obviously, resistance. Okay, support will be the lows here. Yeah, 111. Are we really just that few pips off the lows? we're 12 pips off the lows. That's it. All right. I'm not going to write down that. Well, I mean, I'll write it down, but I'm going to write down, more importantly, is going to be 111. Whatever that spike low is, 111.20. So I'll write down 111.20, 111.20, 111.50. Those are your 2 areas of support. Okay, we're back into a bearish trend in the euro. Um, Kind of a sideways trend, but it looks like, if you take a look at the daily here, a sideways trend. Actually, you know what? I'm going to put it back in a range. I'm going to put it back in a range for now. Just be careful with it, ahead of the FOMC. Now, the cable, on the other hand, it's a different story. The pound dollar is extremely weak, and this is I can't believe how weak the cable was going into Friday. I mean, we were down 200 pips at the end of the day. We closed at our lows. Now we're bouncing right now as the dollar is pulled back against a few different currencies here, but overall the cable is extremely weak, and I'm actually gonna delete everything here for a moment. Let's just drawing remove lines for current. Okay, let's do that. All right, now. The one thing, let's go out to a monthly chart, and everybody should know this because I've hopefully ingrained it in your brain. The break below 135 has been so significant because that is, all we're doing is we're consolidating at multi-decade lows. Period, end of story, okay? And there we are below 135. Just, this is continued, I mean, big time resistance for the cable. Now, let's take this trend line right through here. Any move to 129.40 will probably find some support because that's going to be trend line support. So I guess the point here is that if the cable, which looks like to me it's a bear flag pattern, dangerous, very dangerous looking, right? Extremely dangerous. So if this bear flag pattern starts to play out, you just be really careful as we approach 129.40. See if that sucker wants to play. What do you think about this? One points us to 128. Scary. If it wants to play out. Okay. So the support levels that we're going to have to watch are 129.90 because that would be the low from Friday, right? 29.96, 129, 129.90, and then 129.40. Those are big. 129.40, 129.90. Whoops. 29.90. Resistance right now would be the overnight highs to negate this flag. $130.75. It's bearish. Plain and simple. No other way to look at it. It's scary, especially if we start breaking back through the 30s and into the 20s. Like if the euro hits new lows, drags the pound down. Dangerous. Swissy. Okay, so I agree with Paulie. Swissy is going to challenge some major resistance moving forward. Again, I really don't expect us to break higher ahead of the FOMC. I don't. But if you look at, okay, the 2000 highs, following this is the Swiss National Bank removing the floor on the Euro Swiss. Okay, we rallied back, challenged that trend line, challenge that trend line, challenge that trend line, challenge that trend line, finally broke above, and then now we've set up a channel. This is a weekly chart on the Swissy, which means that this parallel channel is significant because you can take the same line right here, right across the tops, and that's containing us. So what that really means is that any move up to 98.60 is going to be major resistance, and that's what Paul and I came up with this morning, was 98.60. And that's going to be your 88% retracement. That's really the line in the sand for the Swissy, right? I mean, that's ultimately the line in the sand, because if we break above 98.60, there's nothing else really stopping it. Again, I don't expect that to be broken ahead of the Fed, and it's going to take a rate hike to get us through there, frankly. And the chances of that happening, less than 20%. But you're saying there's a chance. There is. If you guys want to short it, it's a place to do it. You guys know I don't like playing the Swiss to the long side, but I'm just saying that for those of you that want to play that, that's where you do it. Play it on the short side up here, like this, because you play it on the short side. That's your best risk reward there. More importantly, if that thing breaks higher, we're going to see 101 pretty quick. Not going to be a lot to stop that. Okay? All right, there's your Swissy. Let's take a look at the yen. Now, what's most interesting about the yen is the yen's down today, but futures are higher. You notice that? Futures are higher, yet the dollar yen is weaker. Now, I've still got a small dollar yen long sitting in it, which will be really interesting is if the dollar yen strengthens and futures go down from here. If futures go down from here and the dollar yen starts to strengthen, I'm going to really be more and more convinced that the dollar is now acting as a safe haven currency status. Okay, and that's important. That's going to be important to identify. All right. Now, the dollar yen's back at support. We're at trendline support right now. This is the same support that held us on Friday. Okay. We're right here. That means this 88% retracement of this move is going to be pretty important today. 101.60, because if that breaks, then we should challenge this one. I'll have to write them both down. 101.20. So 101.65. Oh shoot, I forgot to do the rest of the dollar Swiss. I'll come back to that. 101.20. Oops. 101.20. Okay. Let me go back to the Swissy. Sorry, I thought I got support on the Swissy, but apparently I didn't. Okay, so where's support on the Swissy? The big move, shallow retracement, just taking off again. I mean, for all intents and purposes, this breakout point is holding. You see that? Wick, 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 wick. 97.80. Oops. Okay. Yep. Strong. Swissy is very strong. All right, let's go to the dollar yen. So we figured out where support is. So resistance is obviously right here. Let me just grab this yellow line. If I can grab it, there it is. Okay. So obviously it's 102.50. No ifs and or buts about it. Okay, now here's the thing. This channel, it's not perfect by any stretch of the means. It's been how should I say, the channel that we've had here has been around these levels. You know, it's not perfect. You know, as we got up here the first time around, I was like, man, I cannot believe this dollar yen is breaking out. Then it, you know, failed there. We came back up, challenged the trend line perfectly recently, but I still think it's a, you know, quote unquote around here. It's not like a perfect perfect breakout point, which the market very rarely is perfect, but it's also you know, we have to realize that around, you know, around 102.50, around 103, if the dollar yen gets up towards those prices, yeah, that's a breakout. Now, do I expect that to happen today? No, we don't have any data today, if I'm not mistaken. Let me just go ahead and double check that. Today we have nothing. NAHB Housing Market Index. So who cares what the home builders think? The home builders are always bullish. Why? Because they build homes. I'm a home builder. I'm always positive. Yeah, we're building homes. You know, it's interesting. I took on Friday. Is it Friday? No, Saturday. Saturday. Now I live in Phoenix, Arizona. Well, I live in Scottsdale, North Scottsdale, but in Arizona, we have one of the hottest housing markets in the U.S. It's always known to be, you know, we go to the extremes. You know, when we have a housing crisis, we'll get hit the hardest. When it's good, you know, we tend to thrive. Our area, you know, here in the U.S. We're very similar to Las Vegas, San Diego, Los Angeles, San Francisco, that type of barometer for our housing market. I was driving my kids on Saturday to go to, I took them to this really huge park called Fountain Hills. Fountain Hills is where one of the largest, if not the largest fountain, man-made fountain in the world is. It's I don't know if it's the largest, but it's huge. I took them there because there's so many Pokemon things there. So, you know, my wife had gone out to dinner and was going to a show, and so I took the boys out. Anyway, well, on my drive there, I didn't realize there's so much new construction between Scottsdale and Fountain Hills. I was like, man, where are all these people coming from? You know, it's like you know. So I guess we were just talking about the housing. National Association of Home Builders, and they're definitely positive over here because they're building all sorts of new homes all over the place. It's crazy. I hadn't even noticed that before. Anyway, okay, but that's not gonna that kind of data is not going to drive the dollar into new highs. If it is, it's just an excuse. I don't really see that being a catalyst to drive us, you know, higher. You know, but anyway. Okay, the yen, let's go over the Canadian. So here's the Canadian. So the Canadian still challenged by the 132.20, which is really important because that is obviously very, very key resistance. We've come up there and hit there a couple of times. Remember, I still believe Alexander says you still have to build a wall. You're right. I mean, think about the wall, and then the homes that you build around the wall, because of all the people that are building the homes, they need to live near the wall to work on the wall, right? So you have to build all these homes. Of course, it's a great time. Great time to be an American home builder. Obviously, I'm being very sarcastic right now. Okay, so 132.50 is obviously key resistance. I mean, there's no if and or buts about it. I still think that's so big because I still think there's so many people that are stuck on the short side of the dollar Canadian right now, based on the pennant that you see here. All right. Now we are being supported ahead of 131.20. Dips down here. You can see the wicks that are just developed down here. I think even a push to new lows, if we can get to new lows, that's going to provide an opportunity to be on the long side. Because to the naked eye, it looks like we're breaking down, but I don't. I still think that it's such a key breakout point. All right. Of that recent move, the 618 comes in at 131.10. I would actually almost, I think to get long the dollar Canadian, 131.10 would be the place to do it. If you want to get long the dollar Canadian, that's the place to do it. We are in a range, threatening to turn bullish. We're in a bearish trend, threatening to go into a range. All right, let's go over to, we can do the Kiwi. So the Kiwi has had a nice little bounce, enjoyed a nice little bounce. We're back to testing the underside of that trend line. I mean, if you want an opportunity to short the Kiwi dollar, any move up to 73.35, I think that's the place to do it. You have 73.30, 73.35. I think we're almost there. We've gone back to bearish in the Kiwi, and the reason why is that we challenged the upper end of this channel. We've broken this red trend line here, and while we're below that, we're probably going to be drifting back down towards 70 cents. Remember, it's a big week for New Zealand. We have dairy auction results tomorrow. We have the RBNZ on Wednesday, and with the FOMC, there's a lot to take into account for the Kiwi this week. Trendline support, the lows are very important today, which will be, we'll just write down 72.50. It's going to be really key support. 72.50 will be key support. Key support. All right, I'm going to go get some more coffee. I'll be back in a few minutes. Don't go anywhere. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up with our analysis. All right, let's go over to the Aussie dollar. So the Aussie's had a decent recovery overnight, just like the Kiwi dollar and the Canadian. You can see that the Aussie is rallying back, and we're actually I bet we're close to a 38% retracement too. This Friday didn't play out here. Actually, let me delete some of this stuff. We're at an 88% retracement, but I need to delete these lines really quick. So this, do this, do that. Let's get rid of this. I don't know what that is. Let's that, and let's go from this high right here to the low. So 38% retracement right here. Let me double check and make sure that is the high. What is this? Did I draw? We're right at the 38% retracement right now. I mean, we're right at the 38% retracement. Probably not a bad place to be on the short side of the Aussie right now. Channel bottom is over here. If you guys are along the Aussie, I'd be very careful with it here. So I'm going to write down 75.55. See if we can take that out this morning. If we can't, and we turn lower from here, you will know why. We are in a range. We're in the apex still of this triangle. Just keep that in mind. Still right in here in the apex. Okay. Support. I would say support is any move now down to 75 cents is going to be very well supported. All right. Put that right there. So I'm going to write that down too. 75.70. 0.7570, and then support is 75 cents. Easy peasy. Let's go over to the dollar index. Okay, we got to assume, I'm going to assume at this point in time that the dollar continues to drift lower. So any move now down to 95.70 is going to be very well supported because you get a breakout point here, 38% retracement of this move here. That's comes in right around the same place. So support 95.70. Resistance for the dollar index will be 96.10. That's obvious and easy. Okay, we're in a range, but to keep in mind that we've broken also out of this triangle. So, you know, we start making these. If we start making higher highs here in the dollar index, so we start breaking through that, something like that. We start breaking through those, then that's that'll signal that there's a much bigger move in the dollar coming. I don't think that's gonna happen. That's gonna happen ahead of the FOMC, personally. But you know what? I didn't think we were gonna break out of here ahead of the FOMC, and we did. So obviously, I was wrong about that. Peso. Let's go over to the peso. So the peso closed at all-time highs yesterday, or not yesterday, on Friday. I know some of you guys were fading that. I warned you that we were probably going to challenge that, and we've done not only challenged 1960, we broke above and started to make a move higher. The thing about the U.S. dollar Mexican peso is look at the pullbacks are being bought like aggressively. I mean, that's pretty massive right here. Here, let me just go to preferences. So I'm gonna make it thicker. I'll make it pretty. I like fuchsia. It's really nice. See that? Huge, right? Huge. God, I can barely even look at that. Let me change the color. I gotta change the color. I can't do that. Wow. All right. They're much better. Okay. But you see the breakout point? See how well it's holding? So that means whatever's today's lows are very important. 1946. Resistance. Friday's highs. Let's say number 1. 1977. Remember the year 1977? We just moved to Phoenix, Arizona, and I was just a little guy. Pesos turned bullish. Swedish krona or Norwegian krona. The Norwegian krona. Nick made a comment about the Norwegian krona a little bit ago. He said, "Blake, we're back at the breakout point." We slumped a little bit below the breakout point, but maybe I'm looking at it wrong, which wouldn't be the first time. Maybe this is pretty decent support. You know what I would do if I was going to buy the U.S. dollar Norwegian krona? I'd buy it back here. I'd buy it back here at 825. That's where I'd be a buyer. Resistance, we'll just write up the highs as A32. Wow, crude's coming down. So I don't know if Bob Lehman's listening in, but he had sent me a text yesterday, said there's going to be a supply disruption, or a DM said there's going to be a supply disruption in the um, in gas supplies, and anyway, but that's the reason why crude's up so much. But it's actually coming down a little bit right now. He had mentioned that major pipeline breakdown in Alabama already affecting Alabama, Georgia, Tennessee, and the Carolinas. Certain crude ships bound for East Coast have been moved to Florida to avoid disruption. Anecdotally, gas here is more than 45 cents a gallon. I hear the disruption is for a minimum of 12 to 14 days, but could be more, just an FYI. Thanks, Bob. That was from this weekend. But crude, even though stronger, is weakened a little bit. Let's see. Let's go over to the Swedish krona. Here's the Swedish krona right up against resistance. Now, we haven't broke out of the triangle here. So that's something to pay close attention to. 857, 858. I'm going to write down. I know we're right there, but this thing could break. Whoops, 858. And then support, well, I guess support will be right there. 854. Well, this is tight range. We're still in a range, but I think the US dollar Swedish krona is dangerous. Because this reflects a lot of the dollar index. I mean, if you look at the dollar index and you look at the US dollar Swedish krona, and then if you really take a look at the US dollar Swedish krona longer term, like look at this chart. This US dollar Swedish krona, if it breaks higher, it's got a lot further to go. You know what I mean? That could be a massive move, like massive move. All right, guys, I'm going to take some questions. Walter, good morning. Thomas, good morning. Nick said,